Gentlemen, we've gone through the picks that you've given us, but we will come back to you with more questions. Ashwini, just let me wind up this conversation on banks and Rel Capital. Is there a chance that there are some positional longs possible on the non-bank finance companies? I mean, I just have a fundamental argument that banks at this point in time are so weak that business may actually drift to non-banks. But this is obviously a fundamental call that is outside the technicals of the market at this point in time. Anything positive at all in any of the non-bank finance stocks?
See, basically, when the markets are in a bear market, 90% of stocks go down. So even if some positive news takes certain stocks higher, even they will come under pressure, like we've seen with housing finance. Housing generally gets something positive from the budget, but you see HDFC making new lows, LIC housing also coming down. So it's a question of a market trend. And going back to the point about the budget, you can get what budget you want. Chances are market will come down up post the budget. So I don't think really getting into financials on these arguments is a safe idea, because financials overall are under a cloud.
Point. Actually, housing is one area where in fact there is more weakness, because even the banks are rushing there. It's the only one with collateralized loans with a mortgage. There actually the weakness is even more. We will come back to you with more stock questions. We are being joined now by Mr. S.P. Tulsian and Mayuresh Joshi as well. Good morning to both of you, gentlemen. Mayuresh, to start with you, what are the dealing rooms telling you that after yesterday's weakness, you are preparing, fastening your seat belts for further losses? Are HNIs selling out?
Morning, Lata. I think the nervousness in the markets is probably here to stay. And again, I think when you're talking about global volatility, when you're talking about the big event that is expected to come in the next 2 to 3 days, I think a lot of the investors are taking it easy at this point of time. So really what they want to see is what the finance minister has to deliver in the budget, and then probably the course of the markets in terms of how the economic direction will be laid out will be more clear. Having said that, probably I think a large part of the HNI positions are very, very soft at this point of time, and they're very, very calculative in taking very, very small positions in selective sectors. So clearly, I think very selective at this point of time, and again, I think watching out for what the budget has to get delivered by the finance minister.
Okay, Mr. Tulsian is also here with us. Mr. Tulsian, you were telling us yesterday about how there could be some more pressure perhaps in the market, and there's some jittery nerves before the budget. For retail investors, how should they approach it? Just wait for the budget to pass and then take a call, or are there any ideas that one can look at before the budget as well?
See, Sonia, in fact, I have been playing on the two major events. That is, one is budget and second is the advance tax payment. In respect to the market volatility and market stability, what I have been referring to, because if you really talk to the corporates also, what corporates do, they place the surplus funds with the funds and all that, whether it is liquid funds which is not directly affecting the market, they put the money in the debt, but we all know the condition of the debt market or the debt paper also. So people have that fear, coming in that, allow these events to go away, the budget. That's number one for the general. But for the advance tax payment, due by 15th March, again, I'm quite apprehensive and I'm quite, cautious that that is also going to pan out. But see the silver lining again, that once the budget is out and, now the consensus is seem to be building up for GST. In fact, that's what I see as silver lining. Small, ray of hopes. I'm not saying that, but if you really see the three major parties, that is TMC, Biju Janata Dal and Jaya Lalita, AIADMK. So all these, are giving some sense, and maybe Congress will not be able to resist for a very long time. So you have to factor in that also. If you happen to get any kind of this news on the GST front in this budget session, which will expire maybe in the middle of March, that can be a good hope. So yes, there are two sides of the same coin. You have caution till maybe 11th March, because 15th March is the advance tax, does not mean that entire selling will happen during that time. So till then, and then maybe thereafter, if some caution, some hope starts building up on GST, then people will start talking monsoon thereafter. So you need to take a little longer view. But for these couple of events for next maybe 15 days or so, I'm keeping a cautious stance.
Okay, Mr. Tulsian, I wanted to ask you about NCC and Gayatri projects, there is individually different news which actually was known that they have been able to sell off or are very close to selling their elevated tollway to India infrastructure funds. As well in Gayatri, there is news that PE funds are picking up some projects. In the mass of EPC companies, many of whom are actually bad loans and CDR cases, are these two buying opportunities?
See, Lata, actually Gayatri, I don't call it as an EPC player. You know, if you really ask me, number one. Number two, they have not been clearly spelled out at which all projects. And you know, they have the minority stakes in majority of the companies. Minority, I'm referring anywhere between 15 to 30% or 15 to 40%. Power projects, infra projects, and all sort of things. So unless until they comes out with clarity on that account, and you know, maybe something really happens at an accelerated pace on the ground, I don't think that anything can. And apart from that, you have been seeing some market making or momentum kind of things, which is also not giving comfort to this kind of stock. Coming on NCC, they have the larger, you know, presence now in the real estate as well, which can also, and they have been doing that. But pure EPC player, if you want to focus on that, is NCC can be considered, you know. And if you see the performance also, financial performance has not been that bad, and any kind of monetizations in their projects, whether it is in the real estate or realty assets or maybe in other BOT projects or maybe other assets, you know, that will be seen positive. So positive stance on NCC, but I will remain away from Gayatri projects.
Okay. Ashwini, two quality companies that have been in a downtrend lately. One of them is Maruti, which has lost 25% of its value this year, and the other one is HDFC, which is sitting at a fresh 52-week low. Do you see more pressure, and would there be fresh shorting opportunities that one can execute in these names?
See, the problem with both these stocks, whether they are quality or not, is that, you know, they are over-owned. And till that over-ownership is there by the FIs, I think that's where they have profits, that's where they are going to sell. So while Maruti can have a small pullback rally, maybe towards 3,700, 3,750, but it's quite possible if the market has to go down, both these stocks will make fresh lows. I think at least 950, 970 is possible on HDFC. Maruti, you know, we can finally get closer to levels of maybe 31, 3200. So do not buy even if you see a green take on stocks like Maruti.
Okay, Mayuresh, what's your sense? Is there any place to hide in the Nifty, or for that matter even in the mid caps?
No, clearly, Lata, I think we've always maintained our stance that in volatile times like these, I think you have to be stock specific. And yes, I think after the sharp correction, you're seeing opportunities happen within the Nifty pack itself and outside the universe as well. You have to be extremely stock selective. Having said that, as I've repeatedly said, I think top tier IT companies is something that the preference is getting laid on from our side. And clearly, I think stocks like HCL Tech, where our belief is that a lot of the offshore efficiency gains, along with the client mining activity, the TCV deals that they're winning, $1 billion odd, 8 transformational deal wins, I think the stock is attractive, valued at this point of time. Infosys case in point, again, Q4 deciding trend in terms of how the discretionary budgets will pan out for a lot of IT companies. But our take is that 11.5% dollar and rupee revenue growth over the next 2 years is not ruled out. And we've again taken very conservative estimates for Infosys. Expectation of utilization levels going up as tailwinds of close to 300 odd pips, and again valuations not too demanding at this point of time. Within pharma, again, our own take is stocks like Cipla, which have got beaten down. There are huge opportunities in terms of the NDA pipeline, and clearly in terms of their earnings trajectory, we are expecting a huge amount of earnings growth to come through the next couple of years. So clearly there are certain pockets like pharma, like IT, selective cement names, where our belief is that the earnings growth should be reasonably better over the next couple of years.
Okay, well, we were talking about infra, and MEP Infra's promoters created a pledge on 1.3 crore shares. That's flashing for you, coming from the exchange. There could be fresh reverses as this news hits, but it is a February 12th charge, so probably somebody new in the market, we do not know. At the moment, that news will definitely rustle. Mr. Tulsian, you were speaking about this small likelihood of some progress on GST simply because politicians have really nothing to show and they may therefore coalesce. Anything you would go long on before the budget at all?
See, if I don't know whether I should take GST as a theme or budget as a theme, but yes, if GST is the theme, then definitely overall that will be the game changer for the overall market and economy. I think that will change the sentiments of the overseas investors. I think they will start coming in, back to India, and whatever selling which we have been seeing will not happen. But yes, as a GST theme, we obviously come one sector in our mind is a logistic. That's a narrow way of looking at it. But yes, coming on budget, I think FMCG should really be seen as a good play, because that there will be definitely the income which will get increased in the hands of the people. Now I'm expecting that probably there is rejig of the tax slabs. They increase the tax slabs and increase the threshold also, because couple of years back that was done by this government by 50,000 rupees, and now people are again finding it very difficult. So if the disposable income in the hands of the people increases, that will be seen quite positive. That's one theme. And second is the infrastructure, spending by the or maybe the boost to be given. I'm not really depending on the government to really invest into the infrastructure, because that's not their capability really, but the measures given for that. But I'm only worried on one hand that they have been talking of withdrawal of all the benefits when the tax rationalization on the corporate front is likely to happen to 25%. I think that's a very serious thing, because you cannot really grow by withdrawing all. You need to give the benefits maybe to the SEZ, maybe to the medical, maybe to the infrastructures, maybe to the oil and gas explorations and all that. So that also has to be seen, because I am keenly waiting whether the corporate tax are reduced by 1% or couple of percentage in this, because he has set the reduction of 5% in next 4 years. So whether that will be back-ended or it will be front-ended has to be seen. So these are the few things which should be watched from the budget. Yeah.
Okay, well, Amit Gupta of ICICI Direct is also with us. Amit, morning. I wanted to take the point that Mayuresh was making about how IT continues to be, a favored space to be in. You have a pair strategy today, long on Infosys and short on Nifty. Take us through that.
See, this has been a strategy which we have been doing for the last 2 or 3 series, and every time we have done it, we have made money. So Infosys is the only heavyweight stock which has shown a lot of resilience after the results. And if you look at the open interest position, it has come down significantly. That means the short positions which were built up before the results, now eventually they are coming out from the system. So that is providing a lot of support to the stock. And there was a long block which happened around 1080 levels, which remains the positional support for the stock. And now 1120, 1140, these levels it has been trading around. My sense is if we go short in Nifty and go long in Infosys simultaneously, then whether Nifty falls more or Infosys falls lesser, and on the higher side, if market reverts, then I think Infosys will give higher returns than Nifty. Looking at the rupee also, which is sticky around 68, that is also giving some positives to the IT stocks. So in that case, I think, and yes, if momentum in Infosys will come immediately once it crosses 1140 levels, because that is where the call writers little bit were active. So above that, immediately 40-50 rupees of upside can be seen in the stock. So this is one strategy which we have been pitching to our clients.
Is there a strategy on the bank Nifty, Amit?
See, that's a weakest component right now. If you look at the short blocks in future segment which have happened, they have happened in most of the banking stocks. Previously it was happening in PSU banking before the results, and now it is happening in private banking. Recently we have seen that happening in Axis Bank and Yes Bank both. In fact, if you look at the call positions, 700 call option in a Yes Bank and 400 call option in Axis Bank, both have been written. So both these stocks are likely to expire below these levels. In fact, whenever such an activity happens in calls in writing side, then the stocks generally sees a 2, 3 or 4 days of continuous fall, and that is why I think if somebody can short Axis Bank at even at these levels, I mean, or a little bit higher, if it is around 388, 389, you go short, keep a stop loss at around 398. I think it should go down towards 370 or 374. I understand the fact that Axis Bank has not breached the January lows yet, but it has been a laggard. The open interest in futures has been at the life high, and with the majority of the short buyers, still we are not seeing the short covering what should have happened in the stock. So that means further lows are likely to be coming actually in the stock in the coming days.
All right, let's continue with that banking discussion. Yesterday, of course, PNB stunned all of us in the evening by naming 904 defaulters, amounting to willful defaulters, I should have said, amounting to 10,890 crores, thereabouts, nearly 11,000 crores. I want to reiterate that this is not a fresh negative. They're just giving you details of their already known 35,000 crore of NPLs. They've just declared them willful defaulters in a bid to be aggressive and try and either name and shame them or to deny other avenues of money for them so that they come to the table to negotiate. So I don't see that as a fresh negative other than just a sentimental downtick. But we had a very interesting set of reactions from Dr. K.C. Chakraborty, the former Deputy Governor and former Chairman of PNB, as well as Mr. Pratip Chaudhary, the former Chairman of State Bank of India. Just listening to the views we got. We are coming back after a break.
This is okay. This is a step. The bank management may be thinking that this will go in the right direction, but I have a problem. You see, nowhere in the world there is a distinction between willful defaulter and defaulter. Ultimately, you will not succeed among for the big people who are the big fishes. Ultimately, finally, you will catch all the small fishes the moment you are trying to distinguish.
Willful defaulter is one who removes the security pledge to the bank without, making good the money. But that is different from somebody who has run the business and made into a loss. That is very different from somebody who, sells the product, but the market conditions being depressed, he makes a loss. So is it not necessary to make a distinction between the two?
Renault Passion for Life presents Headlines of the Day. Brought to you by Renault Passion for Life.
Welcome back. Well, let's pull up the SGX Nifty and the Asian markets just to get an idea. Okay, it is a mild red tick that we are seeing, but it's actually a slightly darker shade of red that is painting all the other Asian markets. There is also possibility of the markets reacting a little negatively to the yuan fixing coming in lower. It is the it is a 6-week low fixing for the yuan, so the markets could take note of that. Those are the early rates coming in, and I wouldn't call them rates, they are bids, and that's indicating green. But let's wait and see, wait for the markets to settle down. The rupee had a strong day yesterday. The dollar actually ended cheaper vis-a-vis the rupee yesterday. So today that might not really be a trendsetter, because yesterday it went in the exact opposite direction of the stock markets itself. Well, still green for the two major indices. At the moment, not a whole lot, but still about 0.1% higher for the Sensex and 0.2% thereabouts for the Nifty. I don't know if I should start reading out the rates. It doesn't make sense, because PNB is coming down -10%. I don't think that will ever happen. because these are known loans and therefore just declaring their names is not really going to be negative. I don't think I'll read out now.
Oh yes, it doesn't make sense, Lata, because if you look at what's happening with Asia, and generally we correlate a lot with the Hong Kong market. Hong Kong has now slipped to a 300-point cut and is at the lowest point of trade. So some of these Asian markets are really bleeding, and it seems like we could perhaps carry that risk of
Much
trade
weaker.
forward. The rupee, there you have it.
Much weaker,
Yeah.
much weaker. I mean, I'm not saying it's weak per se, but yesterday it went against the trend and today we are seeing it opening slightly weaker. So that could also carry cues for the stock markets. Stock markets at this point in time still kind of contrary directions. Nifty is down 0.4.
In fact, now
Sensex
a
is
lot
in
of the
green.
stocks are, a lot of the heavyweights are showing a lot of pressure. SBI, Reliance, you have ONGC, ICICI Bank, Punjab National Bank are all showcasing cuts of anywhere between 3 to 5% odd. So looks like it could be a pretty scary start to trade. And as we all know, the big level to watch is that 68, 70 odd zone on the downside, which was the 52-week low that we hit earlier this month. And that is the significant support level to watch. If that breaks, then perhaps there could be a big spiral downwards for the markets. But before we get to our guests, before we in fact get to some of the technical views, fundamentally Mr. Tulsian has picked out one stock for us that he's observed post earnings yesterday, and that's Elantis Beck. Mr. Tulsian, take us through the numbers and why you like the stock.
See, Sonia, if you go by their, firstly, they have the calendar year ending, that is December 2015. So they have posted their Q4 numbers. And if you go by the Q4, because they are the leading insulation material makers for electrical and electronic industry. For electrical means, which is the copper winding wire, which needs the insulation, primary and secondary insulation. So that's very important. And for all electronic equipment, from moistures and all that. So that's a very critical material, which is made by them. It's a German promoter, MNC company with German promoter holding Elantis, of German holding 75% stake. But if you see the Q4 numbers, obviously because of the crude as a raw material, major raw material, the top line is constant at about 85 crore. But if you see the operating profit has risen by about 30%, closer to about 13.5 crore against 10.3 crores in the same quarter of the previous year. So there has been about 30% increase in the operating profit margin. Come on the full year working for calendar year 2015, the EPS is at about 53 rupees against 40 rupees what they have reported in calendar year 2014. That means the again 30% jump in the bottom line on a yearly basis. Plus this is a debt-free company having 75 crore cash with them. So maybe looking to this performance, I like the stock, I like the results, and then one can take a view on the stock accordingly.
All right. Thank you, Mr. Tulsian, for pointing that out. Well, maybe we can read the rates now. A bit of settling down of the nerves. Reliance is heading the pack in the green. Reliance, BPCL, HUL, HCL Technologies, Power Grid, TCS. So basically, IT stocks are seeing a little bit of a look-in today. They are the green side of the market, and Reliance actually is very high. I don't think, I still think that these are wavered rates. And PNB, SBI are the ones that are lower, but not by a whole lot. It's about 1%, 1.5% that we're seeing lower. So it might be another bad day for the Bank Nifty. But these are largely PSU banks. They don't have so much of a weight in the Bank Nifty. We'll revisit that in just a bit. Ashwini, any bank that you would short?
Well, most of them, but I think PSU banks is where the pressure will remain. So any kind of green tech on a PSU bank should be sold into. I think they will at least retest their previous lows, if not go lower.
Okay. Well, some of these capital goods names like L&T are also very close to their 52-week lows. So 1016 is a 52-week low for L&T. It's now at about 1120. So there's been pressure there. Maruti is close to its 52-week low as well. 52-week low was about 3386, and Maruti is back at the 3500 odd zone. So many of these heavyweights are close to 52-week lows. But Sudarshan, the same question to you. Maruti was one of your biggest short calls since the start of the year, and that trade has worked out really well. It's gone from 4600 all the way to 3500. Is there further shorting steam in this stock, and what would you do now?
Well, it is possible to short it, but Maruti also has significant support in the 31-3300 area. I mean, that zone, not exactly a number. So we are very close to support levels. It could slide 200 points, 300 points before it encounters support. So the big short is no longer available. But the trend is so weak that intraday traders could look to sell it.
Okay. Well, Amit, we haven't finished with your strategies. Let's get that one green stock you have. You have a buy on CESC futures.
See, I think some buying possibly may come into the power stocks now when the government is going to disinvest in the PSU banking, in the PSU stocks. I think Power Grid and NTPC are there, and NTPC it is already announced. So possibly into the private stocks, some kind of buying may come into, and CSC is one of them. Now the stock is definitely close to good support levels of 420, 410, and we have seen that around 18% of short positions have been closed in the stock in this particular series. It has started moving up. Yesterday market was almost 100 points down. So looking at that, it has not given any significant pullback so far. It was almost flat. So possibly these are the initial signs of some kind of resilience in the stock. And yesterday also there was a closer of 1.5% of positions. I think that was again a short closer. So my sense is the stock is gearing up for some kind of upside from here, and another 20-30 rupees of upside is very much possible in this. So 460, 470 kind of targets can be put in place.
Okay, well, there are about 7.5 more minutes to go before the market opens. NMDC could be one stock in focus as the stock goes ex-dividend today. So those technical adjustments will take place in the market today. So keep an eye out on that. Mr. Tulsian, how do you approach this one post going ex-dividend?
See, actually, Sonia, what has happened, the dividend is 9 rupees 50 paise and stock closed at 93, and if you have the dividend of more than 10%, it gets adjusted. But what many retail traders have done, they've shorted the share at 93. Yesterday it closed at 93, thinking that dividend adjustment will not happen, but they are wrong, and they got caught on the wrong foot. And if you see, on 12th February, the board of the company declared this interim dividend of 9 rupees 50 paise. At that time, the stock was ruling at around 75. So that means the big run-up has been seen in the stock from 78 or maybe sub 80. I won't say 75 to 78, sub 80 to as high as 93. That means 13 rupees has gone up today, and many people have bought this stock even from the dividend earning point of view. But today that 9 rupees 50 paise will get knocked off. Yesterday the stock closed at 950, 93 plus. So it will get knocked off. That gives you a value of 83.50. But thereafter I see a lot of delivery based selling also happening in the stock, because those who have bought purely from the dividend, in fact this is a wrong calculation on their part. That's what in fact caution or advice to also is given to the retail investor, that one should not go for these type of wild trade without understanding that how those stocks get adjusted. So maybe today it will correct to 83, 84, but I'm seeing a weakness in the stock. Won't be surprised to see the share correcting to 77, 78 in next couple of weeks as well, because as I said, long liquidation, there is an open interest of closer to about 1 crore 40 lakh shares. So that will get liquidated, plus the delivery based selling will also start happening. So apart from 9 rupees 50 paise reduction, I further see weakness in the stock maybe over next couple of weeks.
Okay, this is a disturbing sign. The bond, 10-year bond is opening over the 8% mark. Now, it's also possible that now this is the old 10-year and therefore it's fallen into disuse, and hence the yield has gone high, because there aren't, it's a low impact, it's low volume and therefore a high impact trade. So maybe we shouldn't be looking at this, maybe looking at the 759 10-year. But that's not a number you like to see on the screen, and 8% on the 10-year. Certainly disturbing. Well, we'll come back to the bond discussion if merited, but for the moment let's give you some more trading ideas from our Super 6 participants.
Okay, those are some ideas coming in from our segment Super 6, but getting back to the markets, looks like it's going to be quite a difficult start. At least that's what the pre-opening rate is suggesting. 0.5% gone in pre-opening, and a lot of sectors are under pressure. Top of the list is the PSU banks. Mayuresh, what do you do with both PSU and private banks now? Would you completely stay away for a while, or are you looking at nibbling into some of the private banks?
Again, Sonia, I think I've always stated the point that PSU banks, the the asset quality woes are here to stay. So clearly, I think Q4 numbers are still expected to remain very, very soft and tepid for a larger part of the PSU universe. Having said that, how the credit growth pans out over the next few quarters and what happens with recapitalization are important aspects to be looked out for from the budget, specifically in the case of PSU banks. From the larger private sector banks, again, our take has been, I think you have to nibble selectively. And clearly, I think the woes for the private sector banks which have an exposure to the corporate side would continue for Q4. And if there is any delay in the credit cycle, and again, I think if the working capital constraints of end user industries continues, you'll still see stress happening on these bank balance sheets. But clearly, FY17 is where our earnings prospects for a lot of these larger private sector banks appear far more robust. So clearly, selectively look at larger private sector banks, something like an HDFC Bank, an Axis Bank, an ICICI Bank. But time and again, I think I've always said, just invest 15%, keep your cash, conserve capital, and clearly, I think wait for budget. I think the next few days, I think even if you don't do anything in the markets, let's see what the budget has to deliver. Let the volatility settle down, and then probably take fresh positions.
All right. I've just got SMSs from a very good friend who reassures that Mr. Aditya Puri is fine and recovering. I just wanted to say that he went through a cardiac operation, and this is just a mutual friend who has messaged back saying that he is fine and he is recovering. This is also market moving information, so that was why I thought I'd even mention that. Well, coming back to markets, just about half a minute away, and it looks like the Bank Nifty is going to take it in the chin. Of course, PNB, BOB, SBI are the ones that are leading the fall, but the private sector banks have not been spared. ICICI Bank may start with a 1.5% cut. HDFC Bank with a 1% cut, and HDFC Bank is the biggest weight in the Bank Nifty. So that's what's pulling the Bank Nifty. Of course, the PSU banks are doing badly, but that's not why the Bank Nifty is doing badly. It's largely because ICICI, HDFC Bank, Axis are also in the red, particularly HDFC Bank. Okay, there goes the bell, and the biggest cuts have been reserved for PNB. That stock is now 70 rupees, down 3.5%. Kane India is next, obviously because of the fall in crude prices, and that's 2.5 down. Vedanta down 2.25. Then comes Bank of Baroda 1.6, ICICI Bank, SBI, all those banks down about 1.8, 1.9, racing to a 2% cut. Tata Motors as well, probably because of the strike as well, is down about 1.9%. That's among the top 10 losers. And then comes Hindalco, BHEL, down about 1.3, 1.4. So it's across the board weakness. It's not just banks, it's oil marketing companies, it's NTPC, BHEL, it's Tata Motors, it's the private sector banks, and it's Dr. Reddy's as well in the top 10 list. So it's a little bit of an indiscriminate selling, you will have to say. It's not targeted at anyone, though the banking sector has come for more punishment. That index is down about 1% as I speak. Among the stocks that are bucking the trend, BPCL, obviously a beneficiary of crude prices, is up about 1%. It was also among the buys for our chart experts. Power Grid is up 0.6, Maruti is up about 0.4, Grasim 0.6 up, HUL 0.3 up, Z Entertainment 1/3% up, HUL, ITC are both actually up. So today refuge comes in the oil marketing companies and a tad bit in the FMCG companies. Among the others in the green, Infosys, Kotak Mahindra Bank, Bharti Airtel, minor gains 0.2, 0.3 thereabouts, but largely the index is down to its knees below the 7,100 mark emphatically.
Oh yes, not a good opening at all for the markets. In fact, now the index is just less than 200 points away from that 52-week low of 68.70. So watch out for that. Of course, today the mid-cap index is weak. So the index itself is down almost 1%. The Bank Nifty is underperforming once again. And the market breadth is at 1:3 in favor of the declines currently. You have a lot of mid-cap stocks that are under pressure. NMDC, by the way, goes ex-dividend today. So there's that technical adjustment that you're seeing on NMDC, down about 10%. Railway stocks getting hit hard before the rail budget tomorrow. So Titagar Wagons is down in the red. Tex Rail as well is in the red. All of these stocks, positions getting unwound there. Quick Heal, it completely got thrashed ever since its listing. So another 3% gone on Quick Heal. And some profit taking is what you're seeing in some of these names like BF Utilities, which have been big gainers this week. So BF Utilities down about 3% odd. Just Dial, Dish TV, lot of trader favorites are now under pressure as well. On the upside, you have a bit of fillip coming into the sugar names. So Balrampur Chini and Sri Renuka Sugar are up almost about 1 to 2%. GMR Infra, just a tad bit of gains is what you're seeing over there. And a couple of these stocks, NTPC, because of the OFS that was subscribed about close to 2 times. So NTPC has also been in focus. The auto names, Maruti Suzuki has resumed production of its vehicles in Gurgaon and Manesar. So there's just a bit of a fillip there. But otherwise, the market is under pressure, not started off well at all. Anuj also joins in. Anuj, we were discussing this point yesterday about how it's a double whammy. On one hand, you have FI selling, and on the other hand, you seem to have reducing domestic support from the market, and that continues to be a worry.
Yeah, you know, the bigger problem for this market is like yesterday when the market closed at the low point, even at the lowest tick, and the last tick was below 7100 as we discussed, even at that last low tick there was aggressive selling that was taking place. When that happens, you know, last hour belongs to professional traders. They know that next morning's is going to be weak, and that's why you've got the gap down. The only relief could come if some of those traders would want to book profit, because the market has given you a gap down, so you'll be making a lot of money from yesterday's positions. But this is a bear market, so in bear market even intraday you make money by shorting, and that would be the risk. So today could be that kind of a day where you keep making intraday lows. At some point the market will bottom out and give you an intraday rally. That would be the test of this market, whether that intraday rally is sold into or not. As of now, we'll just have to wait and see where this market bottoms out, because this is really the crunching bear market. And you know, we must point out that our market is now beginning to fall under its own weight. There's something which is bothering Indian market alone. I made this point yesterday as well. 2 days back we had the European markets which were up 2%, Dow futures were up 200 points. That was as good a time as any if the market had to take out that 70 to 50 mark. It did not. So clearly that was the top for the market, and now that bear market has resumed.
Yeah, we'll have Adrian Mowat to discuss that issue, but I was speaking to a bunch of foreign investors. Their point was Indian markets was the place where a lot of ETFs and foreign money was hiding when China was falling debilitatingly last year after August. And now after the earnings and the bank NPLs, it now feels like this is a good time to shed off those positions. So India is coming for a particularly larger dose of selling, but they think mean reversion will happen very soon. It's not as if there's any particular pain point. It is just that those who were hiding from China are now actually taking profit in India as well. They did not see India as therefore the worst of the Asian markets by any standards. But anyway, those are small semantic arguments. At the moment, markets, you know, the advanced decline just expanding. I was noticing in the first 2 minutes it was 2.5 stocks in the red for 1 in the green. It expanded to 3.5 stocks in the red for 1 in the green. Now it is almost 5 stocks in the red for 1 in the green. So we are belaboring with almost 85% of the stocks lower than where it was yesterday, and yesterday it closed at the lowest point of the day. So Sudarshan, you know, yesterday every intraday dip getting sold would still have made money for the bears. So today if someone shorts even at 7,075, there's money to be made?
No, I'm not sure. That's why I'm suggesting buying 7,000 puts for a slightly longer view, not just intraday. It's not necessary that today's shorts, intraday shorts may make money.
Okay, Ashwini, Ashwini, would you book profits on your short call at this point? I mean, 7,000, it went to about 7,060 or so. What would the recommendation be?
See, first of all, Bank Nifty recent lows were 13,810 and we almost went there, 13,820. So basically Bank Nifty will decide if it breaks the recent lows, then you know Nifty will again weaken. But I think a retest of 70, 80, 7100 shouldn't be so unlikely, given that we've already fallen yesterday. Today could be a bit of a sideways day. So if you are, you know, extremely intraday type of person, probably this gap down should give you the profits. But if you can carry with your positions, I think there's no reason to book profits. The market will keep going down. Yes, you can get out before the budget to avoid the volatility, but so far there's no reason to get out of shorts.
Any reason to take a fresh short now? I mean, if you missed the first gap down and you only got at 7,075, would you add a fresh shot?
See, maybe if we retest, say 70, 90, 7100, because you want some kind of margin of safety, selling into a gap down after a big down day is not the best of trading strategies.
Any trades, any short calls in the oil and gas space, Ashwini? Because there we are seeing deep cuts, CAN, ONGC. They've been big sellers through the week, and Reliance too has been under pressure. Any trades there?
See, Reliance reversed yesterday, so out there we should expect 920 coming in. CAN also had a bit of a rally while crude prices were going up. So again, out there you could see 110, 150, which is a key level on CAN. So all of these oil stocks, exploration can get under pressure. Meanwhile, BPHP could do well. But these are all small trades because everything is kind of priced in. So there aren't real major moves. I think the big bear market is in banks, and that's where you should look to keep going short on all rallies.
All right, Ashwini, Sudarshan, Rajat, thank you very much for joining us. We will, of course, come back to you for intraday advice through the day. But for the moment, the markets have made a kind of a morning low at about 7,070.